there. Welcome to Berman's Call. We are here to take your questions on both stocks and ETFs today. You can reach us toll free at 1-855-326-6266, or you can email us at bermanscall@bnnbloomberg.ca. And Larry joins us now, obviously, in studio. Got a couple things you want to talk about today. First off, something that's piquing your interest, and I think a lot of people's, is the SpaceX IPO. Apparently happening sometime in June. Really high valuations, between 1.5 to 1.75 trillion expected. You think these valuations are justified?
So maybe is the answer. We'll see in the very long run, but it's rich. You have to believe that Elon's going to pull off a miracle. There's going to be, all kinds of AI compute in space. You have to believe it's going to be huge, and many do. I heard one analyst say, never short Elon Musk, right? If you did that on Tesla, you would have been wrong. Tesla was this close to going out of business, 7 or 8 years ago. I wouldn't buy it, but everybody is going to buy it if you own the QQQ, right? So it's going to get included within, I think it's about a week. They're going to accelerate the inclusion of the index. And so just be very mindful of that. We did a whole educational segment on this a few months ago. So it's coming now. And if you're going to end up being that last buyer.
Why wouldn't you be a buy? Is it just too risky, do you think?
It's valuation. So if you like the theme, great. Buy it when it's cheap or buy it when it's better valuation. I think it's probably 30 to 50% overvalued based on the numbers I'm hearing about talk-wise. Would I buy it at a better valuation? Sure.
And as you said, there's a lot that's going into this. Do you think Starlink is kind of the key driver here?
Well, 100%. So when you look at where the revenues are coming from, and they don't disclose too much about it. You really have to pick at it. So I read a couple reports this weekend, and people who did pick at it. Mm-hmm. And the general conclusion is that, I'd pass on this one.
Okay. Yeah. All right. I'll have to wait and see how that goes. You're also watching NVIDIA. Obviously, NVIDIA reported earnings recently. Shares have been down since then. What do you think is going through investors' minds, with this company in general and after the latest earnings report?
So we know there's about $1 trillion a year coming in CapEx, according to some of the best minds that are following this sector. So it's going to be huge. We're very early days of AI. NVIDIA has a significant advantage over everybody, but they are the most expensive cost, right? So now there's some competition coming from Broadcom and others. And so the question then is, do they lose that lead at some point? Does cost pressures come? Do margins get? There's a reason the stock isn't trading for a huge multiple anymore. And it's kind of growing into it. Mm-hmm. So again, here's another idea. You want to buy it when it's cheap, but the stock is struggling to try to, made a new high, and it's struggling holding that valuation.
Yeah, there's a lot of pressure now as a company grows this much, right?
There is. So this is the challenge when you get to a place in a market cycle where good news, arguably we've got a lot of good news there, and the stock just couldn't go. Mm-hmm. And that's usually a negative sign. It's not bearish. Doesn't mean you go out and sell everything. It just means it's already in the market.
Something else that I wanted to get to before we just go to break quickly is fears of inflation staying stickier for longer. Obviously, we're seeing the latest developments coming out of the Middle East. Maybe there's a peace deal on the horizon, but we've heard that before. What do you make of investors' fears that inflation could be higher for longer?
Yeah, so let's look at the market-based pricing. So this is a curve. The orange line is the forward-based futures pricing. So in the futures market for crude oil, we go out about 10 years. And so we can see prior to the war breaking out, where front month crude was and where back month crude was. This is the futures curve as of today. Now it's come down significantly. We were trading in the hundreds. Yeah. So now we're around 90 today. And if you look at the futures price going out in the back half of this curve, long-term prices are actually lower. So the market is telling us long-term prices are going down. Is it the underinvestment? Is it supply is ample for that time frame? Whatever it is, the market-based pricing mechanism is telling us this is not a bull case for long-term. I can argue for you for the next year or two,
Right.
if the geopolitical tensions don't solve themselves, and I don't think they will, that there's money to be made here. But when we start going out long term, the story is not attractive.
Interesting.
And so it depends on your time frame as an investor. And I just wanted to highlight that because it means a lot in terms of the duration of how you think about your investing.
For sure. Okay, we're going to take a quick break right now. Coming up, though, we'll get to your phone calls and emails. Here's the number again. And there is, of course, still time to give us a call with your questions on ETFs and large cap stocks. We'll be back in a moment. Welcome back to Berman's Call. We are here with Larry Berman, and we're going to start taking your questions. So we'll start with an email question, this one coming in from Wade. And it reads, is it a good time to start a position in TLT? Larry, what do you think?
Yeah, it's one of my favorite exposures right now. Universally hated the U.S. long bond for all kinds of reasons, including uncontrollable amount of U.S. government deficits far into the future as you want to look. With the U.S. 30-year above 5% over the last 20 years, it's been an extraordinary buying opportunity. So you got to weigh that decision making, but it's my favorite, one of my favorite picks when I look out a year or two and say, where can I make 15 or 20%?
Interesting.
Right? There's not a lot on the equity side that I see that potential with, but on the bond side. So I like to step into markets where things are widely discounted and unloved, and I think bonds are there now.
Yeah, judging by that one-year chart, looks like it. Okay, we've got an email now from Justin, and it reads, I've seen a lot of discussion recently about newly launched ETFs claiming to hold SpaceX pre-IPO. How does that work, and is there a benefit to that? Some claim to already hold about 25% via special purpose vehicle, and they've got some ticker symbols as examples there. Others claim about 5% held directly. How would you play SpaceX? So a couple questions within here. Can ETFs already hold SpaceX pre-IPO?
So yes, so they've created all kinds of special purpose vehicles by way of secondary markets and other ways of getting access to private securities. The regulators have allowed limited amounts of illiquid assets into ETFs.
Okay.
And so it's starting. But as I said, from a valuation perspective, don't like it, wouldn't trade it, wouldn't buy it. So don't recommend it. But it's something that when we go through the next economic downturn and the valuations on all these correct because they're not profitable, that's your next best buying opportunity. I wouldn't be, if you're a day trader, sure, try to trade it around. If you're talking about buying it and holding it for a couple of years or more, I would wait for valuations to improve.
So even with these ETFs in this email, there's a couple that hold about 5% directly. You're still just a no for now.
Yeah, because the rest of the space sector too is, you know, I don't love it as an entry location.
Got it. Okay, we're going to go to the phone lines now. Andy is calling in from Calgary with a question. Hi, Andy. What's your question?
Hello to the both of you, and thank you for taking my call. Larry, I wanted to know your thoughts about Uranium Royalty Corporation, ticker symbol UROY. Is this a good, broader way of playing the uranium sector with the things that they're involved in and what's coming for uranium? I'd just like to hear your thoughts about that. Thank you very much.
Okay, thanks for your question.
You know, when I look at the returns there relative to other ways of getting exposure, URA ETF that plays the uranium producers broadly has outperformed UROY. I don't know the company well and exactly what it does. I do know the spot uranium business is a challenge. And I don't, you know, well, it's just, there's not that many players. It's not a broad, deep market, you know, so it's not like you're trading the S&P 500. You're trading a very niche sector where there's not a lot of players, and there's geopolitical regulatory issues, and policies can change, like Germany, all of a sudden, no more demand. And so I like playing the companies better than I would. And I don't know enough about UROY to say that it's really good.
Right. You prefer URA.
URA, broad specter. You get Cameco, obviously, but you get some of the other miners in there. To me, that's a more liquid way to play it.
Okay. Back to the phone line. Sam is calling in from Brampton with a question. Hi, Sam. What's your question?
Oh, hi, Lindsay. Hi, Larry. Thank you for taking my call. Larry, my question to you is on TGED, the TD Active Global Enhanced Dividend ETF in a registered account. Do you think this is a good buy at today's price, or should I wait for a pullback? Or I would appreciate your opinion on this. And keeping in mind, this is in my RIF account. Okay, thank you a lot.
I'm sorry, I missed the ticker on that.
Yeah, I believe we thought Sam was going to talk about a different company. So if Sam's still there, maybe we could try the ticker again.
I'm here.
What's the ticker symbol?
TGED. That's the TD Active Global Enhanced Dividend ETF.
Yeah.
Okay.
The challenge with dividends globally, especially if you're in a taxable account, is that you don't get the favorable tax treatment. If you're in a registered account, it's fine. But my question is, why do you need income focus in a registered account, right? Like a registered account should be for maximum growth in general, not necessarily for current income, because you're typically not using it as current income. When you deregister the money and take it as income, you get the worst tax treatment, right? So, where I like a lot of these funds that are more attractive or are able to get better tax treatment, like covered call ETFs that are dividend focused in taxable accounts, I like them much better. So I have no issue with TGED at all. I'm just questioning, is that maybe not, there could be better things to own.
Okay. We've got an email now from Kevin, and this one reads, I'm looking to purchase a REIT ETF as a long-term income position in my TFSA. What factors should I consider when making my selection? Also, do you have a preferred ETF in the space? And if so, at what entry point?
Okay,
sure
so don't have a preferred one, but here are some of the factors to really consider. So a few of them are market cap weighted, meaning you get the two big ones, half your portfolio, and then everyone else is a little bit smaller. So that's one issue. There's equal weight ones where you get an exposure to all of them. So you're overweighting the average REIT. Then you've got very different REITs. You've got seniors living, you've got apartments, you've got retail malls, you've got offices. Some will do better than others, and it may make sense to go into certain individual REITs as opposed to an ETF that would play the whole sector.
Okay.
So, those are some of the considerations. There's ETFs with covered calls on them. So if you're in a taxable situation, you might want to look at those because you're going to get better tax treatment on them. So there's a number of different things, and those are some of the considerations that I would look at. And you really have to do your homework here. I can't recommend which one's better because I don't know exactly what the need is.
Right. Okay. Back to the phone lines we go. Kevin is calling in from Niagara Falls with a question now. Hi, Kevin. What's your question?
Howdy. Three things. First of all, thank you for taking my call. Second, I want to thank Larry. Years ago, he recommended ZWB. I took him up on his recommendation. The dividends have been terrific, and the last year has been amazing. I've made a small fortune off that ZWB, so thank you. Finally, I have some family members who are buying the ticker symbol, the ETF Bank. I haven't touched it because it seems too good to be true, but the dividend's amazing, so I guess I just wanted your perspective on it. Thank you.
Okay.
Bye.
Thank you for that. Okay, let's start with the ETF Bank.
Yeah, so, these strategies that are designed to enhance your returns with options give up all your capital gains. So I just pulled up a quick since inception chart here of the bank ETF. And the actual price change going back to 2022 when the issue came it's up a little less than 9%. The total return is 98%. So you're giving up a lot of growth for the extra enhanced yield you're getting. Now it's tax efficient yield, so that's a good thing in a taxable account, but you're giving up growth. So if you were to put in just ZEB or an ETF that had some of the life cos and the banks in it, you would actually do a lot better in that. Okay, so when the markets are good, that's fine. Everybody makes money, it all goes up, but it's, well, what could I have put my money in that could have done better?
Right.
So if you need the tax efficient current income, then nothing wrong with bank because you're generating that, but you're giving up your maximum total return typically to get it.
Okay. Back to the phone lines once again. Nizar is calling in from Scarborough with a question. Hi there. What's your question?
Hi, Lindsay. Hi, Larry. May I have your thoughts on Manulife Financial, please? It is trading in between $52 and $54. Is there much room for growth? It has a reasonable dividend yield in line with other financials. Thanks for taking my call.
Okay. Thank you for that. Manulife, room for growth?
Yeah, I think so. I mean, all financial services companies with the aging demographic benefit. So in a life co, as people are living longer, they pay premiums in more. Insurance companies benefit from that. The move in it, changing dynamics in interest rate markets, the financial services companies can take advantage of that. So, you know, it's been a pretty good stock for the last number of years if you look at it. Maybe we can pull up a 10-year chart on Manulife just for some perspective here, because what happens from time to time is that this could happen.
Right.
You get a good dividend, but you get no growth, right? So in the right market environment, they're fine. The question is, how long does this continue before this happens again? Because I can guarantee you that this is going to happen again.
Right.
I just can't tell you when. But that's been the story for Manulife. And so how long do the insurance companies left? Put them all in the same bucket for that matter. And before they consolidate and just pay your dividend without any growth.
Okay.
I like the banks better generally. I don't like the banks here because they've had a massive run up.
Right.
I've been saying this for 6 months though, and I'm looking like an idiot because they keep going up.
Well, we'll have to see what happens later this week. I mean, we've got
do.
a lot of earnings reporting later this week. Okay, we're going to take a quick break right now. Coming up, though, is today's educational segment right after the break. Stay with us.
Larry Berman is one of Canada's top technical analysts. He's the co-founder and chief investment officer of Q Wealth Partners. To learn more, visit qwealth.com. Opinions expressed by Larry Berman are his own and do not necessarily reflect the opinions of BNN Bloomberg, its parent company, or affiliates.
Welcome back to Berman's Call. We are here with Larry Berman, and it's time now for Larry's educational segment. So, Larry, today you want to talk about quantum, whether it's the next layer on top of AI.
Yeah, so I've been following an AI-based research firm for a couple of years now called Tenviz. So hats off to them. This was in their weekly report, and I clipped some of the charts and stuff out of their report. When we look at the names to trade, there's an ETF called QTUM that tracks the sector. So if you look at our chart here, you can barely see it, but that is the return over the last couple of years of that ETF. These are the two big stocks, D-Wave and Rigetti, that have gone ballistic. We probably did our last segment somewhere in here where I talked about this meteoric rise, and that on the other side of that, we would get this really ugly correction because that always happens. So we're there now, but what happened in the last few weeks is the US government said, hey, we're sinking a few billion into quantum. And IBM got a big contract and it just ignited the sector again. Yeah. So I wanted to look at that. And so as I'm doing some research this weekend, I come across what Tenviz writes and I go, oh, this would be interesting. this is an interesting chart here, the next one. And it really is looking at the spend that has come out of China and Europe. And so here's the US here, and here's China and Europe in terms of government-led spending, in the segment.
Right.
And so the U.S. is behind the curve again, and probably why, they talk about AI and leading the race there. Quantum my understanding sits on top of AI. It can accelerate it. But I've heard it explained this way. There's a lot of problems that even though Claude and ChatGPT and these agents are going to be great for productivity, the speed at which they compute is relatively slow compared to what quantum's. If you can believe it.
Yeah, wow.
So there's going to be problems that couldn't be solved today or could take years to solve that could very easily be solved. So applications in healthcare and you name it, and on and on and on, of things we can't solve for today. So this last graphic kind of puts it in perspective in terms of processing speed. So you've got your traditional CPU, everybody knows about those. We now have our GPUs, say NVIDIA. Now we're all building these quantum processors. And it's not going to replace it, it's going to enhance it. Here's the problem. These companies have no commercial viability in terms of revenue and net profitability, probably for at least 5 years, but more likely a lot longer. And that's the problem with the space now. So I would say put D-Wave and Rigetti on your dashboard, trade them. When they correct massively like they did, those are your buying opportunities. So I think there's a buying opportunity now here, but it's not for the faint of heart. It's going to be extremely volatile. But if you're looking for the next thing like AI, this is it, probably it. But it's a long-term bet.
Interesting stuff. Yeah, I have a feeling we're going to be talking about quantum quite a bit in the next couple of years at least. Okay, Larry, thank you so much. We'll leave it there. If you'd like to follow Larry online, you've got options from YouTube to LinkedIn. Here's how you can reach him. And that's it for today's show. Join us for Berman's Call Mondays at 3 p.m. Eastern, 12 noon Pacific. The close is coming up next. Stay with us.